Hi, and welcome to the Market Alert for Friday, the 21st of May 2021. So Bitcoin, big tech, bullion and bonds bounce as break evens, black gold and the dollar break down. A big bounce in almost everything after yesterday's bloodbattery. That was, of course, on Wednesday. No surprise if you follow the Market Alert, because as forecast, they will try and attempt to bring the market back if they can. And yesterday afternoon they succeeded with aplomb to do this. If everything is going to be just fine, why do the shortages just keep getting worse? Which is bizarre, really. Can't understand why there are shortages, but there are. Here we are in 2021, and we were told that things would be getting back to normal by now, but instead there are severe shortages everywhere around us. And of course, this is impacting upon inflation. Both the Fed and the PBOC want inflation surge to stop, but what can they do? Well, they can't do a lot if there's huge demand and there are shortages, because it's obviously going to create a demand until global supply chains are untangled, and unless we get no further fiscal stimulus, it seems hard to believe that a sudden return to the lower stable commodity prices can last. So this is a dangerous game, really, going forward. And what with all of the other issues that the government's got with the banking system, the repos, the reverse repos, etc., we're certainly heading into interesting times. But don't worry, we'll just keep bringing the market back. Let's have a look at the implied volatility. This down yesterday because of the major reversal in prices late afternoon, down from 1635 to 1511. So again, crisis averted in the stock market. News today, we got a lot today, haven't we? But it's all flash news this morning. It's that time in the economic calendar where we get all of the flash news. It's a pain in the rear. Last month the news was spectacular, as you can see here. The figures moved higher, and it was the month before. Sorry, it was the month before when we had the big jump. So forecast is more or less for the same. Yeah, it was last month when we saw a big jump in the flash manufacturing. So the forecasting more or less the same across the board there. So yeah, it'll be interesting to see. But yeah, it's a pain because this news is so close to each other. The market just starts to make a move, then stops and waits for the news. So bit of a pain, really. So let's have a look at the markets. Let's start off with the Dow for yesterday. This is the daily chart. The market trading down to the 78.89. We saw on Wednesday, as I've said, if you get a shakeout, they'll want to bring the market back. This is what they did yesterday, bringing the market back from here to 62. The market holding above this at the moment. Got a cluster of moving averages there. 5 and the 20 bar need to close above this. Also need to get above the 78 and 89, which is drawn from there to there. However, if we get through this longer term, we want to draw from here to here as an upside target as well. So here are some overlapping fibs for the market. Let me just select these and just drag them out of the way so you can get an idea of the areas. We're okay at 78, but 89 ties in with 62 as well from here to here, and then we've got from here to here. So there's this confluence of fibs at this area. The key one, again, though, is going to be these two, or key ones, I should say, is the 78, 89. The 89 is important because that brings you back to here, and if it fails, then and things get worse in the reverse repo market, that's the interesting area. But we've got a bit to go in the Dow to get to this level, so we'll keep those on now, keep a note of those as well. But yesterday afternoon, just look at this, it just never stopped. They just kept pumping the market to the upside. Look how prices just hugged that 5 bar moving average. It was just insane. And then later on in the evening, you've got a situation where from this high to this low, let me just drag these across, you'll see the market stopping at 89. This is what I'm talking about in the daily chart. When you get that back to that 89, then you start to see prices really move to the downside. You generally don't get a situation where it goes up and it comes down. It goes up, comes back and then comes back to 89% before then moving to the downside, which you're seeing in the chart there. But overnight, obviously the Dow moving to the upside as well. Again, you've got your retracement here, just moving up, and again you've got again that'll be just sitting at 89% because that's how it works. Let me just redo that and extend right this time. So from the high to that low just takes you to 89, just coming through it and then starting to move to the downside, because that's how it works. The market has these patterns that it adheres to. Let's have a look at the DAX. This is a bit stronger than the Dow for whatever reason. On Wednesday, the market trading down to the 78, found support here, huge volume, brought the market back. Yesterday, the market trading up to the 78, which we drew in yesterday morning. We went straight through the 50 and 62, but not until the afternoon, so we can remove these. And the 78 and 89, as I've just spoken about, is the crucial area which is drawn from here to here. So it's a big swing. So up, back down, and then to here. And it's what happens here. Do we do this, or do we go on to make a new all-time high? Again, we'll be able to determine that at the time, because the last time it put in this new all-time high on Tuesday, it wasn't long before the market hammered it back through. Well, now you can see them trying to bring it back. But the volatility here over the last few days is huge, as you can see. We've gone from these tiny, small bars to a lot of volatility. So, yeah, I mean, it could quite easily go through to make a new all-time high, and in particular if the Dow chose to drive back up to the all-time high as well, it could do that. But at some point, it will give up the ghost and then do this. In the 2-minute chart for yesterday, what a boring morning. Unbelievable. It was like watching paint dry. It was just sideways. We started off with a buy that failed. We started off with a sell that then found support straight away. So get out of the trade at the 200 MA at the psychological level. The market then just traded sideways and then eventually started to move to the downside. Again, we've got this down, back up. This is a about 38-50% retracement. And then eventually we broke the BRN and the 200 MA and the 20 bar and the 5 bar, and then prices sailed all the way down to the DP where it found support, which you can see here. And then once it broke it, again, get the right tool. Once it broke it again, we then continued lower. But then all of a sudden we see a cluster of volume in the market, a bit of climatic ending to the down move at the BRN, and prices just start to move back. And once they get back above the close, they continue to move to the upside. And then into the afternoon session, prices not moving a great deal. It was a good move from the start. A bit of a pullback, but we knew that we'd already got the momentum in here. Again, we pull back 78, the market retraces, but again, won't break that psychological level once it got through it, and then traded sideways, and then eventually caught up with the Dow and just moved nearly 100 points in this move. Again, look at how the momentum in this market just drove prices higher, staying above the 5 bar moving average until it closed below and then made its way down. And overnight, prices have been sitting at yesterday's close, as we can see there, back below the 200 MA, then back above the 200 MA at the moment. So let's do what we always do, and let's compress the chart, have a look, see where we are in the bigger picture. I'm going to remove that line. We can see that prices have already traded up to yesterday's high. We need to get through this in order to move and progress to the upside. Let's just reacquaint ourselves with where we are. So 15,478 is the 89. Now this is worth putting on the chart. So 478. Let me just draw this in. I've just removed that line and I could have used it. So let me create one. We'll keep it yellow, it's easy to see. let's make it even easier to see, make it a big thick line. So for, what was it? This is age, isn't it? What was the number? 478. So let's just go back, and then 478. 478 is a lot lower than I thought. There we go. There's 478 is actually the R1. So through the high and up to the R1 is going to give you the 89 in the daily chart there. So keep an eye on this one. It's not that far away to get to this area. In fact, you can actually see it's less. It was probably about 80 points as we're currently trading, which is nothing. Anyway, closing below the 200 MA at the moment. We've got the DP down here just in case they decide to have a profit-taking day after yesterday's big move to the upside, which is not uncommon because we saw this on after we'd made the new all-time high on Wednesday. You'd expect the market to do this, and it didn't, and then move lower. And in fact, on Tuesday when we made the all-time high, if you recall, once that was achieved, they were just happy to bring the market back. They had the shakeout on Wednesday and brought back on Thursday. Well, actually started to bring it back on Wednesday. So it could go either way. We could see the market trading sideways back down to the 20-bar moving average. It is dependent on some of the flash news, particularly the German news. But you know, to get to the 89, it will not be difficult if the market moves to the upside, as you can see there. So just a warning there of what if we do move up to the R1, that's a crucial Fibonacci retracement area. So finally, let's have a quick look at the metals, which is this chart, and we're in the gold chart, so we'll start with this. Look at this over the last couple of weeks, how the volume has increased dramatically in the gold market. I didn't notice this until this morning. It's been a slow build up there, but you can see that there's a lot of activity and interest in this arena. We need to take out this 1875 convincingly. We're just trading above it at the moment, but we need to see a really good drive through this area. Again, we have a situation at the moment where we've got this high to this low that needs to be taken out. So let's just draw this in. So from this high down to this is actually lower, and you can see we've got a 78% in the way there as well. So that needs to be taken out on the upside. We've already got so we've got the extension just across there. That's all there is there, isn't it? It's just happened to be trading that at the moment. Yep. So we're just trading here at the moment. So these are your two upsides for gold as well. And also, again, you'd have to keep an eye on that 1928 level. First of all, we've got to get above the 1900 psychological level, which is only $100 away from the magical psychological $2,000 area. Silver lagging a bit for yesterday, but still holding, which is great to see, and again up on the overnight. Now short term, we need to break from here to here on the upside. So there are the short term fibs. We're already no, we're not, we're just about to approach 38. So all of these areas here, these short-term fibs, have got to be broken, including this one here where we've got the 28.32. A good start to begin with would be to get back above the 28 level. That would be useful before we head back up to the area here, which is a bigger 78% retracement that we drew in from this high on the 2nd of Feb down to the low that we had in the March, 31st of March. So even if we get through this small cluster here, we need to take out at the 78. Now we could get some help today from the dollar, which you can see has been sitting sideways there, and as I've said before, it needs to break the 89.66. Get through this, and then we start to see the metals prices move to the upside. But don't be surprised if we see this and then reverse back, because it's a very important support for this market. Okay, I think that will do it for this one. There's a lot of information again. Yeah, let's just have a quick look, see what the DAX is doing at the moment. It's a bit weakish, just drifting down a bit there at the moment from yesterday's high. It's got to turn around and take this out to move back to the upside, just finding a bit of support there at the 200 MA. Okay, that's it for this one. As ever, thanks for watching. See you in the next one.